Naspers is a multinational media giant with stakes in internet businesses in emerging markets, pay TV and print media. The group's most significant assets are 35% of Chinese internet company Tencent and wholly owned DSTV MultiChoice in Africa. Naspers has a market cap of 207 billion rand, a price to earnings ratio of 38 and a dividend yield of 0.7%. So Naspers' presence on the African continent is through that DSTV and that MultiChoice platform.
Yeah, there are 5.7, I think it is, million DSTV subscribers now, of which about 4 million are here in South Africa and 1.7 outside of South Africa. And, you know, it's a real strong presence because it's much better than anything else you can watch. I mean, it's just self-evident. Everybody knows that. And in most of these countries, they have customized the bouquet somewhat. So in East Africa, you can watch East African League football, soccer, sport. I must say, sport's the cornerstone of this stuff. Everybody in Africa is mad about soccer. So, you know, you can do all sorts of creative sponsorship deals around that. So a fabulous business, excellent cash flow generation. Look, it's expensive to buy all those sports rights, but I think that's a very, very good business.
Stefan, your thoughts on Naspers?
It's a one stock on the South African Stock Exchange that I think every parent must buy for its kid. It's one of those stocks that, and it's not just in Africa, it is really talking to the entire emerging market consumer play. Everybody forgets about the South American investments, which we also found very interesting, where they have the leading brands like eBay, the eBay and Amazon of the South America, Buscapé, thank you. And OLX, which they've now also brought into South Africa. Those are massive websites in South America, and yeah, they're just growing.
And they're also present in China with that whole Tencent.
So basically they've been going around the emerging markets with a checkbook, picking up these internet assets. So Tencent really stands alone, and that one, of course, is listed in Hong Kong, so you can see its value. It's one of the most valuable internet companies in the world, huge in China. And remember, in China, they don't allow people like Facebook and Google to operate there. So their own internet companies like Tencent and Weibo and you know, all these others do extremely well. But then they've got all these other things, like you say, in China and India, they own, boom, suddenly you find they own Marcofoni, which is the biggest internet company in Turkey. They've just done something new in India. They've got a big business in East Europe. So really they've become like the world's most interesting emerging markets internet company. But it's relatively unknown, I think, in global markets. Every now and then in the global media, you see somebody refer to it. But I think there's a big opportunity there sometime down the line, because these big media giants like Apple and Google and Amazon, you know, they after a while realize they want to be where the people are and where the growth opportunities are. So I think there's a big, exciting unlock process there that lies ahead of us.
Should parents be buying this one for their kids at these levels, Paul?
Yeah, I think so, because you know, it's fairly elevated. It looks expensive on a price to earnings ratio basis, but you can also value it on a sum of the parts in terms of putting the whole bunch of businesses around that they've got, and you get to a number quite easily in terms of, you know, either the one method or the other.
So hot or not?
Yeah, hot on this one.
Definitely hot.